Could a 4-year-old beat Cathie Wood? And that's what we're going to test in this video. Hey, in today's video, I want to explore Cathie Wood and ARK Investment Fund. Now, you may already know Cathie Wood or ARK Investment Fund, but if you haven't, she's the founder of ARK Invest, and it was a very successful fund a couple of years ago. She had a winning streak where she placed these large outsized bets on tech stocks, and it paid off. And this gave her this aura of being this clairvoyant or savant in the tech space, and she had this ability to spot upcoming major macro trends and profit from them. But it's a reputation I think is not well deserved at all. And in fact, I think her performance is terrible. I want to take a look at how Cathie Wood has picked her stocks. And more specifically, it got me to thinking, could a 4-year-old beat Cathie Wood? And that's what we're going to test in this video. If we take a look at ARK's performance over roughly this last 2-year period, if I take it from peak down to trough, it's roughly a negative 80% performance there. So nothing to be proud of, and my belief is that you really have to struggle to get returns as negative as this, even in a bear market. So let's take a look at why I'm so harsh on this. It's because of the research. Again, it's not the fact that the fund has dropped. It's the research that went into this that has me really questioning many of her picks. And I'm going to start by looking at Tesla. So if you look at their investment thesis for Tesla, they're expecting $4,600 per share in 2026. Now, in fairness, this is pre-stock split. There's been a 3-to-1 stock split, so adjust the price accordingly. But here's the problem I really have with the research, and it's related to the autonomous driving. She's factoring in this lofty share price based on the commercialization of autonomous driving with robotaxis, so autonomous ride-hailing services. The big problem I have with her research is if you look here at the report, it basically says that their updated downsize case for autonomous ride-hailing to launch in 2026. So there are two fundamental issues I have with this. She's expecting autonomous ride-hailing services in 2026 to be able to take and capture the start of that, capturing that $11 trillion market, as she puts it. Or did she fall for Elon Musk's lofty claims? My biggest beef in this entire investment analysis is that she does not consider regulatory approval that's required to get autonomous ride-hailing or taxi services out there. So we're talking multi-country, multi-governmental, multi-jurisdictional regulatory approval that's going to be needed to allow autonomous ride-hailing. This is going to be blocked at every step of the way by laws, lobbyists. Trust me, the other car companies that don't have this are going to try and block this every step of the way. I could be completely wrong, in which case I'll be the first to make an apology video to Cathie Wood from the back seat of a robotaxi, but I'm feeling fairly confident this is not a video I'm going to need to be producing. So when I look at Tesla's analysis, it really makes me concerned. You know, her share price, for example, for Roku is equally concerning, quite honestly, because she's expecting $605 per share for Roku. But Roku has a lot of competition coming up that did not exist before. Apple TV is making tremendous progress. Google TV, Amazon, great hardware. And for example, for me, I'm currently a Roku user, but when it comes time to upgrade, I'll be upgrading to Apple TV because that's the ecosystem I'm in. And similarly, people will choose Google if they're into the Google and Android ecosystem. Moreover, Roku does not have certain benefits that Apple, for example, does have, which is having their own content and streaming service. So I don't see how she can expect Roku to have the same level of performance that it had in the past based on competing market pressures. And I think if you look at, for example, let's take a look here at Roku's performance. Let's similarly take a peak to trough roughly. So we go from there to there. Wow, surprise, surprise, a 88% drop. You can just see by the chart that it looks like another Cathie Wood pick. So yeah, where is she expecting this to go to $605 per share from its current price? I don't get it. So I think the more you start deep diving into Cathie Wood's picks, the more you see things like this where you're just like, gosh, even a 4-year-old would know that this is not true. And which takes me to my experiment of this video is let's put a 4-year-old to the test against Cathie Wood. So the way I conducted this test is I took all of the NASDAQ top 100 and I plotted their logos onto a piece of paper, or onto a slide rather, and then I printed it out so that it's all black and white so that colors would not detract from the attention span that a 4-year-old brings to this. And I gave this to Amelia, my 4-year-old, to ask her to pick the top 10 stocks that she wanted to pick. So let's see how that goes. I need help, okay? I need you to take this and I need you to draw which ones do you like the most. Like, show me which ones you like the most.
Up.
Okay. What else? Which other ones do you like? Okay.
I'm drawing the letters.
Yeah, okay. Which other ones here do you like? Can you... Okay, good. Which other ones?
Square.
Okay, that's good. And how many do we have? Let me see. 1, 2, 3, 4, 5, 6. 4 more. Okay, that's a good one. Okay.
Look at I draw.
That's great.
She's purple.
Yeah. Which other ones? Okay. Okay. 1, 2, 3, 4, 5, 6, 7, 8. 2 more. Which ones do you like? Okay. Good job. Thank you very much. All right. So that was Amelia's top 10 picks. Now let's take a look at the performance of these shares. I plotted it out for the period almost 2 years from just when I started recording this video, this exercise, so 3/1/21 to 2/27/23. These are Amelia's picks, and there is ARK Investment Fund. For that time period, ARK Investment had a negative 71% return. Way to go, ARK Investment. Amelia had a couple of nice picks. I was really happy that she chose Apple. She did unfortunately choose Activision, which hurt the overall performance. Side note, I invested in Activision and similarly was not happy, but she had some good picks, like 42% here, Old Dominion Freight Lines at 56%. All that to say, Amelia's picks averaged 17% total return for the last 2 years versus the negative 71% return of Cathie Wood. So my hypothesis is correct. Indeed, a 4-year-old can pick stocks better than Cathie Wood can pick stocks. Maybe I should start selling Amelia's stock picks. Now, I'm at that point of the video where there's the obligatory please subscribe, please like, call to action, but hear me out on this one. This is an inaugural video on a new channel, so your like or subscribe is particularly important to me right now, as it'll show that proverbial algorithmic love to YouTube, and I'd love to see some traction on this financial channel. So if you enjoyed this content or got any value, or if you're interested in Amelia's stock picks in the future, please do give it a like or subscribe. I would really appreciate that. So I hope you enjoyed this video, and I look forward to coming back to you with another financial investing video. Until then, happy investing, and may you get outsized returns, i.e. not Cathie Wood style returns.